going on, guys? It is James Lee here from Celestin Capital, and welcome to today's video. Today I'm going to break down this gold trade for you guys that I took, and which was actually a 6% gain on my account. As you can see here, we had a 6RR, 1 to 6 RR, so we only risked 1% in order to gain 6%. This was a beautiful trade, and I'm going to be breaking this trade down for you guys, show you guys exactly what made me get in and exactly what made me target this area down here. As you can see, it actually went past our target. So this could have been a 1 to 10 RR, 1 to 10 RR, but we actually caught a 1 to 6, which is not bad, which we're not mad about. We are extremely happy about this 6% gain on our account. And I'm actually going to show you guys proof of this 6% gain. I'm going to pull up a screenshot right after I break down this trade for you guys. And so without further ado, actually, let's pull the screenshot up right now. Take a look right here. You'll see the screenshot somewhere on the screen. Don't know where I'm going to put it yet, but look on the screen. You're going to see a screenshot of this 6% gain that I took. Is actually 140 some pips that I caught. So take a look at the screenshot, and then that's proof so you can finish watching the video. If you didn't believe me before, now you'll believe me. So let's go ahead and break this down and show you guys why and how I took this trade. Let's actually get rid of these right here, and let's take a look at structure really quickly. As you can see, structure is on a 2-hour time frame. It's really nice. This is current structure right here. We have a high, which created a new low, which broke this. And actually, we can see that it's mitigating this over here. It's mitigating this to continue down. That's our anticipation of price. We're waiting for price to mitigate this high that broke structure to the downside, to mitigate it and continue to the downside. And this is actually what's happening. We can see that this area right here, our buy area, is being mitigated as well. So we're bouncing between these areas right here. So this is where we actually took the trade. If we go back a little bit, here's where we started looking at the trade. So price was currently right here, right? We had this area, we're going 1 hour, we had this unmitigated supply zone right here, right? This unmitigated supply zone, the last up move before the down move. So price created this, price fell, price never mitigated this area at all. We can see this huge imbalance right here. Price never mitigated this area over here at all. So what we expect price to do is to come back, give us some kind of confirmation to continue to the downside. And if we see right here, price tapped into it and then automatically fell. That's not enough confirmation for us to enter the trade. We don't want to see just a simple tap and continue down. What we want to see is more like something like this. See price coming here, price continue to consolidate, and we don't want to see price hesitate to continue to the upside. And then once we get inside this area, we want to see structure, microstructure being broken. We want to see a shift of microstructure, right? Because if we're anticipating a sell from here, we want to see price hesitate to continue up. We want to see it stutter. And we want to see lows being broken, right? We want to see lows being broken and a continuation to the downside. So this tap was not enough for us to enter the trade. So what we did was we continued to see what price wanted to do. So we got another tap. We continue to see what price wanted to do. And if we actually take a look here, we can see that in confluence with our sell bias, we see price starting to make what? Trendline liquidity, which is beautiful. So we've got all these retail traders buying off of this support line, right? We've got all these retailers, it's buying up. Whenever it touches the support line, buy up. Buy it, right? Anticipating that's going to continue to buy up. So this was an extra confluence for us to enter into a sell. But again, we're looking to sell in this area to continue to the downside. So we're continuing to look for structure. All right, so here we go. Here is nice. This is actually where we decided to enter the trade. So we see price creating structure highs, right? Structure high. This structure high got liquidated by this push up right here, right? And then where was the last high that made, where's the last low that made this high right here? The leg of this high is down here. You see that? So this was the last push down that broke structure to the upside. And what happened? This last push down was broken. We can see that it was broken by this push over here, right? So what did I tell you earlier? I said that we want to see price come in here and then break structure to the downside. That's exactly what happened here. Price tapped into our zone and then price broke this last low, right? Price broke this low. And then what do we see when price broke this low? We see a huge imbalance right here. Not only do we see an imbalance, but we see a swing high, a nice swing high right here. That price left behind unmitigated. You can consider this a swing high or a supply zone, whatever you want to do, whatever you want to call it. It's part of what I use to get into a trade. This is my entry criteria for when I want to enter a trade. So we see this last swing high left behind unmitigated. So what do we want to do? We want to get in on the mitigation of this swing high, right? So what we did was we put our line right here. So we won't expect price to mitigate this. And we put our stop loss right above the high in anticipation that it won't break this high. If it breaks this high, then we can probably expect for price to, if it breaks this high, if it comes up here, break this high, we can expect for price to mitigate and continue to the upside. So mitigate this demand zone and continue up. And continue going up. But here's what happened. As you see, if we play this out, see price came in. Price came in. Price gave us a nice tap, a beautiful tap to enter the trade. And let me actually put the take profit in. Price gave us a nice tap. Our take profit was about right over here because again, we see this imbalance that we expect price to fill in, right? So we want to put our take profit somewhere in between that imbalance, right? So I put my take profit 50% of this imbalance. So the last down move before the up move. My take profit was about right here. So 50% of this imbalance. So that's the reason I put it right here instead of down here at this demand zone. Because I expected price to either bounce off this demand zone or bounce off of this area right here that I have as a buy zone. So let me continue to break down this trade for you guys. As you can see, price gave us a nice tap. And this was actually a long trade. I'm going to be honest with you guys. This was a long trade. I had to be very patient with this trade because this trade didn't happen in a matter of an hour or 2 hours. This trade probably took about 15 to 20 hours to play out because price kept consolidating for some reason. And if you didn't get in on this first tap, price gave you another entry right here. But I didn't get a second entry in just because, I didn't want to risk more than I had to. I want to stick with 1% risk. I'm either going to take one trade worth 1% or two trades worth 0.5%. That's the most I want to risk in one day, is 1%. So I'm either going to take two trades worth 0.5% or I'm going to take one trade worth 1%. And in this case, this one trade was worth 1%. So I didn't want to take another entry into this trade. As you can see, price is continuing to break down. We're going to play this out. Price is continuing to break down. And if you want, you could actually use this swing high right here as your entry point. If price gets back up here, this could have been another entry for you because we see price continuing to break down. And since price left this imbalance just as it did over here, we can expect price to mitigate this imbalance. So let's go ahead and play this out and see what happens. So price is breaking down, prices break down. I don't think price ever came. Oh, price actually did come back up here, as I said. Price came back up here, mitigated, and then broke down again. So that could have been a second entry for you. Again, I didn't want to get in a second time because I was already risking the amount that I needed to. I didn't want to pass the amount I wanted to risk. So we see price continuing to break down. And then I don't know if it was news that made price drop like this so aggressively, but price just tanked. When I say tanked, price tanked. So as you can see, let's go up to the 15 minute. Let's play this out. Price just fell. As you can see, we are currently in profit. Now at this point, I think we were break even right after the break of this low right here. After the break of this low, I believe we went to break even. So once it breaks this, we're going to go to break even. Bam. So it broke this. Currently at break even. So it's a risk-free trade. And you could have partial too if you wanted to. But in this case, I didn't partial just because this drop happened around, I think it was London / pre-New York. And I'm not up around that time. I'm usually up around 8:30 to 9 o'clock, which is New York time. So I'm usually up trading only New York session. I wasn't able to go break even. So this would have actually been a 3% gain, but because I wasn't able to wake up, it actually turned out as a better trade for me just because, it dropped down and hit my take profit, which was a 6% gain. But let me put my take profit back just so you guys can see the RR. So currently 6% gain on this trade, or 1 to 6 RR, however you want to call it. And then you can see price just continued to tank. We could have actually targeted this low if we wanted to. That would have been a, what, 1 to 8.5, 1 to 8.5. But again, we're not mad about a 1 to 6. We're not mad at all. So that's the breakdown of this trade. And as you can see, if you missed this first entry right over here, if you missed this first entry, which is where I got in, there was a beautiful entry right here as well, as I pointed out, off of this swing high right here. So you could have entered off this swing high and you wouldn't have missed a single pip, barely missed a single pip. It would have been beautiful. And so that is the breakdown for you guys. I hope you guys learned a little something. If you guys want more videos like this, just let me know in the comment section down below. If you enjoyed this video, be sure to hit the like button. Be sure to subscribe as well, because I'm going to continue to post for you guys. I'm going to continue to bring as much content as I can for you guys, because I want you guys to learn the industry as well, because this industry is just limitless. This industry is endless. You can do anything in this industry. And so I hope you guys enjoyed the video. If you did, again, be sure to hit the like button. And if you didn't, don't hit the dislike button. Just don't do anything, all right? So hope you guys enjoyed. Make sure you guys stay safe. Peace out.